traders, Gary Wagner here just before 11 o'clock in Honolulu, 6 o'clock in New York. It is Monday, last day of the month, 31st of August 2015, and this is the daily report for gold and silver. All quiet on the Western Front. We do have precious metals complex as a whole trading very, very nominally, slightly higher on the day. We're looking at gold 1135, call it. We've seen it trade as low as 1126. We've seen it trade as high as 1136.70. So we're just about the mid-range of the day itself in terms of where the market closed. When we look at silver up about a nickel on the day, below $15, above $14.50, $14.63. We've seen it trade to 42 on the low and 69 on the high. Now, we have been looking at a couple other markets. Now, you can see platinum, which had a tremendous run last week, actually off about $11 on the day. And lastly, palladium, and that's really been the shining star, I believe, of the precious metals complex. And we're probably going to want to look at that in detail. That up about $8 on the day, or 1.5% higher. So traders, I wanted to spend the first part of today's show looking at a couple of charts in gold. We're not gleaning a ton of information from these markets. As I talked about a little bit on Friday, if anything, these technical studies I've been looking at are in essence giving us mixed messages. Now, first chart we're going to look at, this is a daily chart, standard candlestick format. We absolutely have defined our highs and lows in terms of this last rally here. And then when we consider the totality of the move down, which of course was from about 1230 down to, call it 1071, the real levels that we want to watch, of course, I believe, is this 38% retracement level. That comes in at 1132. So as you can see, we are just below that point, which doesn't really bode bullish at all. I really need to see it come up above there before I would implement any kind of a buy signal. If you recall also from Friday's show, we identified a single candlestick pattern. In essence, what we were looking at is the fact that we had identified a three-river morning star, and that is composed of these primary three candles right here. If you recall also from Friday's show, what we talked about is to really take that call. What you need to do is to get a confirming candle. Now, confirming candle would look something like this. The following day, which would have been today, we certainly didn't get that. You would have a large green candle, higher high, higher low. That really is your confirming candle. Rather, instead what we got, let's go ahead and erase that, is really this doji candle here, which basically tells us the market's consolidating. In other words, when we take a look at this day's trading activity and consider the highs and the lows of the market today, and the fact that it closes very, very close to or almost exactly where it opened at, is really telling you that neither the bears nor the bulls, either faction, could not overall dominate market activity and actually put up a victor in their cap, so to speak, because it didn't close up and it didn't close down on the day. So it shows us some uncertainty. Now, in light of the fact that we had a small retracement in the equities markets, tremendous rise in oil, tells me that traders are uncertain at this point which way they think gold is going to go in terms of trading. Now, the next chart I do want to look at is a half-a-day chart. Now, this half-a-day chart we also looked at on Friday and Japanese average format. So in this case, you have green candles. And of course, what that is telling you when you have green candles is that you have somewhat of a uptrend, a bullish uptrend. And so when we enlarge this, you can absolutely see we have gone green. However, the body size is important, and whether or not it has a lower wick, because what you're looking for example, on this rise, if you look at these candlesticks right in here, let's go ahead and get a box for it, but when you look at these candlesticks right in here, what you see is large body size, absence of the lower wick, which means that it opened above the midpoint of the prior trading day. And the lack of wicks tell you that at no point did it even trade into the area or below of the midpoint. That's why there's no wicks. And so you don't really look at the upper wicks on the way up, you look at these lower wicks. Reciprocally on the way down, you're really only focusing on whether or not they have the upper wick. So with that in mind, when we look at the current activity, yeah, they're green, but they're incredibly small-bodied candles, and so they're not giving us a ton of information. The other thing is that the MACD is actually crossed and really promoting a sell in the marketplace itself, if you look at it right here. So there's no doubt we are going to have to see if this particular sell-off that we saw right in here, if that's still in play, because that's what the MACD is reacting to. Realize that anytime you look at these moving average-based technical studies, by virtue, they have to be lagging indicators because they're looking behind rather than ahead. Now, in terms of performance, silver actually looked fairly positive today, as I said, trading up about a nickel on the day. When we look at our daily charts, we have a clear defined candlestick pattern that's come out, and that is as follows. Following a decline, if you have a large red candle, and then you have on the following day a green candle which opens at or below closing price of the prior day and closes at or above the midpoint, it's called a piercing line. So we have a piercing line. Then we have, by definition, part of the requirements for a confirming candle, which is a green candle with a higher high and a higher low, but the body size is important. In other words, if you've just got a very, very small range between the open and close, it's not giving you a lot of conviction there. So even on silver, I think we're going to be on the sideline there. But there is a market in the precious metals complex that I am extremely excited about, because what I'm seeing in that particular market is different. It has kind of taken its own path in a different way, and that's palladium. Now, when we look at a daily chart of palladium, the one thing that you can see, and we talked about this on Friday a little bit. Let's just go ahead and pull this one up. But after having the market trade as high as about $6.20 an ounce, we saw it over last week come down $100, which is sizable, 1/6 in terms of value, and then find some support at $5.20, and now is just hovering right below 600. But what you're really seeing in terms of a candlestick pattern, first of all, there is a three-river Morningstar variation. You get that here. You get a strong confirming candle. This would be Friday. And then today, you've gotten the market trading higher again. We've got some real resistance, roughly $20 from here, but I think that there's going to be a big play in palladium, excuse the pun, but that's the one market that I'm really actually excited about, and probably I believe we will take a trade or a stab on that this week. Now, palladium trades like gold. It's a 100-ounce contract. Margin requirement obviously less than gold because of the value. The value is roughly 1/2 the price of gold, and so is the margin requirement. We'll talk about palladium in detail, and we'll also put a link on our website in terms of contract specifications. If you have any questions, just email me at gary@thegoldforecast.com. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.